Hi, welcome to this episode of Founders Journey. Today we have two founders from Flow Flood joining us, and I am here introducing you, Abbe Sultan and Michael Pallas. How are you?
Doing great. Thank you.
Yeah, great. Thanks, Jeff.
So you guys been on the scene, and I'm glad we're able to put this podcast together. Especially now that I know, since we had a little chat pre-recording, that you guys both come from the distribution space, insurance distribution space. A lot of founders, they come from the tech background or even non-insurance tech background. And both of you guys are insurance distribution first, and then move into the MGA tech space of insurtech. So I'm excited to do this episode with you guys, and I'd love to hear your story. Tell our audience how did you get into insurance, your insurance journey, and what led you to say, "Hey, Michael, AB, let's get together and let's build this thing." So now I'm turning the mic over to you guys, and whoever want to go first, and tell us your story.
Cool. I was at Starbucks one day getting coffee and ran into my good old friend Mike, who I've known from school growing up. I played soccer against his older brother, and we had gone to UC Davis at different times. We just missed each other. But life came in a full circle when we met at Starbucks getting a cup of coffee. I was working at Farmers at the time, just getting my feet wet in the insurance world, starting a scratch agency. And Mike had been at Liberty Mutual. And that's when the idea of, hey, let's do something kind of got established while we're waiting to be called for our order. We got our coffee, started sitting down, and there's very little young folks that were in the insurance space at that time. And we said, look, I enjoy what I'm doing, but there's got to be much more to this insurance world other than just farmers. And Mike, you were at Liberty, and your thoughts and all that.
Yeah. So I, like a lot of other people, I was pretty broke in college, and I always had ambition to start a company. So I had a couple professors that were mentors, and I spoke to them as I got towards graduating age, like, hey, what should I do? I want to start a business one day, but I want to build a good foundation. And the universal message was learn sales. So as I was approaching graduation, and mind you, this is a long time ago, I was just applying for sales jobs. And it just so happened that Liberty Mutual paid the best. They had a little signing bonus. So I said, why not just selling auto and home insurance? So I personally cut my teeth with Liberty Mutual. This is really, old school. We were working with the digital rating tool, but at that time we weren't actually binding policies digitally. To bind a policy, you would put a sticker in a book and write down, the policy information. It would get sent to home office and they would record it. So it was really like the infancy of digital insurance. So that's where I learned how to sell. That's where I learned auto and home, and yeah, that's what led to AB and myself kind of reconnecting and learning what each other did.
Mike, what year was this?
So I started Liberty, geez, 2 weeks after graduating college. That'd be 2005, like January of 2005.
Yeah, so we connected probably around 2007. It took us 6 months of, getting a corporation set up, getting names set up. We were thinking about Gibraltar and other names, and the Department of Insurance would only allow you, and what was it? The Secretary of State would only allow 3 or 4 names at a time to be approved. And finally, we got an approval at Stone Creek Insurance, and we were working in a town called Walnut Creek at the time. So when Stone Creek Insurance was approved, it was a little bit mid 2007. Well, we got an office space, probably 200 square feet, a coffee maker, a little small fridge, and then the housing market crapped out.
Yeah. So we started Stone Creek on the retail side, yeah, January 2nd, 2008. So our early years in the retail space were really just about helping people in the preferred space that were desperately trying to save money. I think we can all remember that time when the mortgage crisis was happening. People were losing houses, losing cars, definitely losing jobs. So it's very much a price-driven market. So we ramped up in this price-driven market, but we always had the mentality of preferred. Build a business with the preferred mindset because the business sticks and it's much easier to manage over time. So that's what we did. Just two of us in a room, and some ambition, and quoted, sold, called, serviced, did everything ourselves. And eventually we grew that business. We grew our office space multiple times. Then we opened a secondary office up in Spokane, Washington, just because the cost of employment in the Bay Area was extremely high at the time, and the competition for talent was extremely high. And yeah, it's kind of when we hit our stride and started getting into digital marketing. So we did Google AdWords campaigns, did SEO, and had some pretty successful residential flood and residential earthquake campaigns. We had an employee at the time that built in internal distribution, so the lead would come in and automatically get assigned within our CRM to an agent. It would trigger an outbound call, which would automatically happen, connect with the client. All this stuff right now we take for granted. You can just webhook or an API, or it's all built in. It's really easy to do now, but back then this is all super patched together like a quilt. So
Or you can call super innovative, advance all of your peers. What year was this when you guys started doing the click to calls?
it's 2012, 2013. Yeah.
Yeah.
So they were Google driven inbound leads.
Yeah. So really was looking at cost of acquisition, and cost of
Mhm.
acquisition for homeowners insurance, auto insurance was super high because, you look at your competition. It's like your State Farms, your Farmers, Geico's, Progressives. So there's no way you want to go up against them. They have infinite marketing budgets. This is right around when the private flood market was emerging. So it was largely dominated by the NFIP. And then the market shifted, legislation shifted, which opened the doors for a private market. So we saw a few innovative MGAs in the space. They said, hey, let's start marketing around these products. So that's what we did. Cost of acquisition was super low at the time. So flood,
What
a
is
flood,
slow?
a flood click was maybe like $1.50, earthquake click $2.
Wow.
So by the end of when we were doing that, it was up at like 10, 12, 13. But yeah, at that time it was super low. So we would just drive volume, and over time we became experts in the field, and our agents became experts in the field.
And at the same time, legislation started changing as well for flood specifically. The Bigger Waters Act was passed, where lenders had to now accept private flood. In the past, private flood, certain lenders wouldn't accept it. So now it's becoming more widely accepted. Elevation certs used to be a hinder to obtain for property owners, and these newer MGAs were now not requiring elevation certs. So this is all kind of happening in a matter of 3 to 4 years of us really getting good amount of flood policies under our belt, legislation changing, and then really getting our campaigns out there.
As this was building momentum, and we were having these discussions over time, so we're talking 2016, 2017, 2018. It just started to feel like there was something bigger to do, something bigger in the space to do. We'd been in retail insurance for a long time, and it was it was enjoyable. We loved our team, but it was becoming really hard to do business in California. That's when the market started tightening up. That's when capacity started shrinking. And we got to a point where we felt like we couldn't help our clients. Our clients were getting non-renewed, and we're sending folks over to the fair plan. We just didn't feel like we could do the job that we were supposed to. So at that time, we started thinking, oh, what can we do? What can we do? I was like, hey, well, we've kind of become experts in the flood space. Let's level up. Let's create our own program. Let's become an MGA, but let's do it a little bit differently. Let's look at all of the pain points that we have as retail owners, and let's build a product and a platform that solves for all of these items that we listed out. So that's when we really started kicking around the idea of starting MGA, and that's where Flow Flood came from.
You guys been around for 9 years?
So Flow Flood, the early stages was just a side project. So we would wholesale other people's flood products. So in the infancy, it was just building an independent flood book from a wholesale channel. But over time, we got some binding agreements with different Lloyd syndicates, and we built a digital platform So not a ride around in 2020, we said, all right, let's go full steam ahead with this. Let's really take flow to where it needs to be. And that's when we sold Stone Creek. So sold our retail agency to PCF and went all in on flow. So we had in the early stages, 3 binding agreements, and ultimately have 6 binding agreements, and started the process of building out a digital marketplace, which allowed agents to quote, bind, endorse, renew all digitally with 6 embedded contracts that were our binding agreements on one platform.
Do you guys have your own tech ready to build out?
Yep, we do. Yeah, it's a full life cycle.
So Recall 3. I'm on your website, right? You guys are in 43 states?
That's correct.
How come not Louisiana?
It's a tough place to write flood, especially starting out. We want to make sure that our book is well diversified, that we could handle a catastrophic event should it happen. A lot of Louisiana and New Orleans is actually below grade. It's below level,
Yeah.
and to start out with a state like Louisiana, it's really critical that you get it right. And with a cat product, we got to get it right the first time, and if we don't, then we're out.
I mean,
Jeff,
you guys are in South Carolina. South Carolina below sea level too. So
True.
yep. So there's also a capacity issue in Louisiana, Jeff, is there's limited capacity in the area. So for us, we want not only enough capacity to get started, but we want enough capacity to meet the needs of our agent. So we felt like, hey, if we come with a little bit of capacity and fill that up in 6 months, we're not really doing our agents a service there. So it's all about when the right capacity is available for Louisiana. There's certainly opportunity there, and the tech in flood is just getting better and better and better. It's super granular, getting a lot better with geocoding, a lot better with elevations. You've got some innovators out there that are trying to solve the issue of getting first floor elevation digitally. So we're getting a lot closer when we can be there.
Honestly, we're actually working with a couple Louisiana agents too to really get a good mapping of the area where we feel there's good opportunity to write business, and where we could really alleviate some of the headaches that they have as well.
I like Mike to go back to the last thing that you said about the last couple sentences. Can you elaborate a little bit more on that? Thank you for watching this video. Now a quick message from our sponsor, Mav.
Thanks, Jeff. I want to let you all in on a secret that top producing agencies don't want you to know about. If you're in P&C insurance, you know firsthand how much you're getting squeezed by your call center. It's becoming less predictable and less economically profitable to scale. But here's the thing. The top producing agencies making over $100 million are not running their leads through a human-based call center. They're running them through an AI expert like Mav to qualify, quote, and hand deliver the highest intent qualified leads to your agents. Mav takes care of the back and forth, having unlimited 24/7 conversations with your leads that are personal and relevant so you can scale to the moon. Ready to ditch your call center and 10x your agency? We're giving the listeners of insurtech's $15,000 worth of credit to try Mav. Head to hiremav.com/insurtechs to claim this offer.
Flood is all about flood is where where the water flows,
Yeah.
and where the risk is. So when you talk about first floor elevation, that's how high the first floor of your home, or basically where the risk in your home is above the ground elevation. So let's say you're in coastal South Carolina and you're built to code. You may see the houses built on stilts. You may have houses raised 11 feet. And so you've got, that first floor is going to be 11 feet above the grade, but that's not a data point that you can get digitally. That's a data point that you need to either get from an elevation certificate, which is an outdated measure, or you need an agent or an insured to provide that. Anytime you ask a human for a piece of information, it has a potential to be flawed. So, when there's digital data available, it's always preferred. Now that's a piece that just no one has solved yet, but there's some very, very cool tech that's evolving that eventually will.
Interesting. I have a interesting left field question. It's from the left field. We saw hurricane. What was the hurricane that hit North Carolina, Western North Carolina?
Helene?
Helene, right? And how one of the big reason of Eastern Tennessee and Western North Carolina was due to dam failure. Have you guys ever thought about we need to relook at flood differently based on dams and dams age and then potential to failure rate?
Yeah, so actually in some of the flood data sets, there is dam age, dam maintenance records, as well as levee age and levee maintenance. So
Yeah.
the data is already out there for underwriting. Dams are really interesting because it's kind of a private public relationship. There's a lot of privately owned dams that that had a use at one time that no longer have a use. So they're, left behind by bankrupt companies that are then picked up by the government to oversee. So dams are a tricky one, just like levees. But the
Yeah.
data's out there.
Because I remember like when Hurricane Helene was coming around, and then the consistent flashing news on Twitter was this dam is potentially failing, evacuate. That dam potentially failing, evacuate. I look at dam kind of like similar to what Southern California deal with on all these debris, tree cleaning, debris cleaning to make sure that we don't have natural fire, right? I just pulled up Hydropower Reform Coalition, and they have a map, licensed hydropower dams of the US, right? 91,800 dams. And I would think some of the biggest failure point in the future, a lot of them, the size of the Asheville, North Carolina type of failures on flood will be around these dams.
There's certainly that. There's also huge coastal exposure. There's coastal exposure from Texas on up the East Coast.
Yeah.
And so we've got coastal erosion, we've got changing weather, we've got stronger hurricanes and weather patterns that don't move as quickly as they once did. So they linger and linger and linger. You got storm
Yeah.
surge patterns that we haven't seen occur in the history. So I think the root of all of these issues is we have a changing climate. We have a changed climate, and we have a huge country with immense infrastructure. And no matter how good the infrastructure is, it always has a threshold of what it can do. So from the insurance standpoint, we have to be extremely careful about staying up with the current models and the current view on risk and the data available, that we're making the right selection, because we do need a robust private market to complement the NFIP.
I'm just curious how this dam map match up with all the states that you guys are in. There is a lot of dam in Michigan and Minnesota.
I mean, we live near one right here too, Sacramento. That's also protected, and you look at the states, and the revenue they're getting, the tax dollars, are they being used wisely? I mean, you get into the politics of it, into each state, and it is a part of the decisioning and modeling is looking at these dams in addition to the weather patterns and climate. I think that there's
How'd you guys figure out the reinsurance and the underwriting papers side? Being two guys come from the agency world.
Yeah, you ask questions, ask people that are in the space, and trust good people. And so we were lucky enough to connect with the great Lloyd's of London broker, CJ Coleman, and they introduced us to the London market. And so they've been instrumental in our relationship building and building really valuable partnerships that we value quite a bit in the London market. It's just being open to learning. This life is all about learning. So if you have an open mind and you research and you're curious, you can really pick up a lot.
Have you guys been up there yet?
Every year.
Every year.
Every
What's that
year.
like?
Oh, the first time going there, it felt like, wow, this is what the insurance center place looks like going to Rome and going to the different churches, like going to Lloyd's of London, going to London and being in the insurance world is something which I think all insurance agents and anyone in the insurance world needs to live and feel. And I think it's very valuable. everything around there is all about insurance, and you feel like I'm in the right place right now. It was invigorating.
Especially coming, yeah, Jeff, especially coming from the Bay Area, where we're surrounded by techs. I drive down to the South Bay to Silicon Valley, and you take it for granted. You're driving around like, oh, there's Google, oh, there's Microsoft, oh, there's Nvidia. Like, there's all these companies. You just drive by it. But if you're from Ohio and you fly out to the South Bay, and you're in tech, like, hey, it's a mind-blowing experience. Look at all these platforms and companies I use and hear on a daily basis. That's how it felt for us. Is going out to London is like, wow, insurance is important here. It feels important. It doesn't have that stigma that sometimes it has in the US, where it's can be looked down upon at times, or brokers can be blamed for things that maybe they shouldn't, or carriers can be blamed for things that maybe they shouldn't. So yeah, it was wonderful to go there, and great to see the famous Lloyd's of London trading floor, and just to see really how it all started.
I was curious, like, I've never been there, so I'd love to visit one day. But if we were to replicate it here stateside, where would it be? Like, would we put it in Texas? Would we put it in New York, Florida? Like, where would it go?
Probably New York. Probably New York, I think. But it's hard. We just have such a big country. And I think that's what we all fail to realize sometimes, is how vast our country is. Out to Hawaii, we've got 6 time zones. But even on the mainland here, it's a huge country, 6.5 hour flight from one end to the next. You talk about England, so it's a much smaller country. So you can have an epicenter of insurance in London, where if you want to work in insurance, you move there. Or you've got, little centers in other parts of England. But in the US, you can do almost any job in any part of the country. So it'd be very, very challenging to replicate. But, I would say New York, most likely.
So at Lloyd's, you were able to find papers and the reinsurance same place.
Yeah. Everything is all, within a couple of miles, I guess. The Lloyd's trading floor is not necessarily where that happens. So you have traditional trading floor with boxes where underwriters sit and brokers shop risks and put together, a policy. That's not necessarily the space that we operate. So we are meeting with syndicates and folks that are either in charge of flood departments or property departments, the flood or property silos. And yeah, talking about product capacity needs, distribution, and that's how it gets put together. But yeah, you can do it all there. If it's a great place.
You guys still bootstrapping, or are you guys institution back now?
Bootstrapping.
Bootstrapping, nice.
Yeah.
It's a good feeling. It's also tricky, because not many people are, not just in the insurance space, but in all startups, especially when it comes to tech.
Yeah, it's rare. Almost everybody gets some kind of round, friends, family, or a buddy, a buddy round. So what do you see on the horizon for 2025? What do you guys
Growth.
think is going to happen this year?
Growth. Yeah, we had a great year last year. We had exponential growth last year, and we see it continuing. We also see some new products launching in 2025. So we're excited to expand our flood offering and perhaps offer a couple of complementary products in the catastrophe space. So yeah, if I had just one word to sum it up, I would say growth.
What do you have coming?
We'll have to wait on that piece. We don't like to make announcements until it's ready to go, but we'll let you know as soon as it happens.
This is not the place everyone drop their new information.
Maybe it's a little bit closer in development, maybe at that point.
So you guys also do earthquake. What made you guys have 2 product offering?
We don't do earthquake in the
you don't do
retail
earthquake.
world. Yeah, in the retail, that's where we started with earthquake and flood to see which
Gotcha.
would be a better line. The
Well, I
problem with
misunderstood
earthquake,
that part.
yeah, earthquake, a lot of insureds would buy it and then let it cancel for 2, 3, 4 years and maybe buy it again. It was a feeling that they had. I need earthquake maybe this year, and I don't need it for 4 years. Whereas flood was much more consistent. The issue that we're starting to see, not issue, but one of the issues with flood is some folks, property owners, don't feel they're in a flood zone. And there is a mentality, oh, I'm not in a flood zone, and that's not accurate. Everyone's in a flood zone. And if someone's not in a special flood hazard area, that's a zone X. So it's a lower risk flood zone. And part of the maps that we are using or have been used in the past, they're 20, 30, 40 years old. So we're starting to see a lot more remapping going on, which is great. If more property owners get involved and start purchasing flood insurance, it alleviates, it makes the premiums come down. When there's a hurricane or a weather event, it allows communities to rebuild at a faster pace because more folks, more property owners are insured. And having these communities and businesses being rebuilt means it's good for the local economy there. Folks are getting back in their properties. Folks are able to go back to work. And that's something that we're seeing in areas hit by these weather events. Those that had more percentage of insurance are able to rebuild at a much faster clip than those that haven't. And that's what we're trying to really promote is the education of why it is important to have flood insurance.
What percent of your book is commercial versus residential?
Yeah, we're 90% residential, 10 commercial. So, we expect that to maybe skew a little bit more towards the commercial side in the coming years. There's a ton of room for growth in commercial by nature of our platform, which is residential. So our platform is 100% residential. We have a brokerage department which does commercial. That we'll be heavier on the residential side.
Talk about back in the day when everybody just sell NFIP, and nowadays there's a lot of these MGAs, including yourself, right? Including yourself, and then there's a lot of different MGAs on the scene. When did that take off? Thank you for all your support to our channel. Here is a quick word from our sponsor. Please click on the link below in the comment section to sign up for a demo with Track AI.
What if your insurance sales conversations could work harder for you? Meet Track, your AI-powered conversation intelligence partner. Track automatically captures and analyzes every customer interaction, providing instant call summaries, risk analysis, and AI-driven coaching insights. Say goodbye to manual note-taking and hello to more selling time. Track handles the admin work while you handle the revenue. Fully integrated with your favorite platforms. Plus, get custom AI analysis tailored to your unique business needs. Transform your sales team's performance with Track. Visit track.ai today.
Click the link in the description below to schedule a demo with Track today.
When it was mostly the NFIP, there were a couple of innovative MGAs that were around that had flood products. And they, talking about companies that have been around for 15, 20 years, led by really bright people. And then those really took off when the Bigger Waters Act passed, which opened the door for more MGAs and companies to step in. So we started seeing, I think, a growth of MGAs around 2017, 18, 19. It's just continued since. So before you'd quote flood with the NFIP, or you wouldn't quote it at all because it was too frustrating the way that NFIP used to be rated. And then some people found the private market, and so they started rating with the private market and the NFIP. And over time, the method that people have quoted has been different. So, say you had a retail shop, or you had a retail shop, maybe your agents had access to 2 programs, maybe 3. Now you can go to, hey, 7, 8, 9, 10, and you pick your choice. The problem is having too many options, just like with auto and home, having too many options can be a hindrance to the process. You're talking about a $1,000 average premium policy. You don't want it to be quoted with 10 different MGAs. So it's really on the agency owners to decide who they want to work with and what company best suits them. And, for us, we have a digital approach, a digital platform, but we're insurance people. So we have a strong emphasis on customer service. Folks that, if they need help through the platform, we're going to pick up the phone and help them out, not just send them to a chat bot. We leverage technology, but we really we cherish the relationships that we have with our agency distribution. So we're a bit of a hybrid in that sense.
Who's the tech person out of the 2 of you?
The tech person, Mike.
Yep, that's me.
Who's the negotiator?
Depends what we're negotiating.
Yeah.
Everybody talk about AI these days. Is that a flood roadmap?
Yeah, absolutely. Yeah, for sure.
How would
Yeah,
you
just
use
being able to process and model mass amounts of data, identify trends, identify errors in underwriting, identify potential issues, identify potential opportunities, automate certain pieces of underwriting. I mean, the use cases are darn near infinite.
So analyzing on the back end, but not consumer communication.
Our technical consumer is an agent or an agency owner. So yeah, of course, having robust self-help features that allow agents to search within your library and get accurate responses without having to read through articles and sift through videos is absolutely on the roadmap and a huge value. Huge value. Yeah, I use AI in code checking. But yeah, I use AI on a daily basis, and Abbe does as well.
Man, I'm so curious. So just keep on asking questions. So now I have to think about what question to ask next. What part of your journey that's interesting that you think I have missed?
For both of us, in high school and college, we were previous business owners. I had a dog walking business right out of college. I wasn't sure, I couldn't find the job that really uh, hit my needs. So I started the Pooch Patrol, and it's always been this journey of learning along the way. And like Mike, I think alluded to earlier, like being a sponge and learning. You start with an idea and you break it down into its parts. Take one part at a time. Whatever your idea is, if you look at it as a whole, it becomes this huge a mountain and it's hard to climb. But you break that into little segments and say, look, this is the first segment that I'm going to look at. And once I get there, then I'll look at the next segment. I think that's what you're able to become successful or get to where you need to be is by breaking things down into smaller segments and chewable parts.
Mike?
I think for a lot of founders of companies, you look back on it, and the most enjoyable part is the grind. And I don't mean the grind that's, you know, the stuff that drives you crazy and, not having a healthy work-life balance. It's like having a healthy work-life balance, but the fun is in the challenges. The fun is solving the problems. The fun is building and meeting new people and growing and having goals and meeting goals and setting new goals. Yeah, I remember the day that our deal closed selling our retail agency, and you kind of sit there and you're like, you expect confetti to drop from the sky and you expect all the people around you to be cheering. And it's just not that way. You get some pats on the back from your buds, good job, your partner, your spouse says, hey, great work, this is awesome. But you're sitting there like, okay, this is great. I'm happy. But man, what a journey. What a journey that was. What cool stuff we did. What challenges we had. There's heartbreak and success and all of that. So um, I think that's what's can be lost a little bit is appreciating these moments where it's hard and really celebrating the moments when you're succeeding. Because that's what it's all about. That's what creates the memories and not just for us, but for our whole team.
Are there any other founders in the space that you guys continue to hang out with, get together once a year, meet at big events, conferences that you guys, push you guys and continue to go forward?
The way tech is right now and the way information flows is you can always kind of see what everybody else is doing. I mean, obviously not behind the scenes, but in the front end, so you kind of know what everybody else is up to. So just seeing what people are up to, folks raising money, innovative approaches to underwriting, new tech platforms, that's motivating itself. And I look at that, say, it's great when I see that. When a company in our space gets funding or a company in a parallel space to us gets funding, hey, that's awesome because there's a lot of business to go around. It's nice to see people that we know or people in our space succeeding and or becoming successful. The flood space, there are a couple of flood conferences every year where everybody shows up to. So you see all the familiar faces, you see a lot of your partners. So those are always fun to go to because it's like seeing old friends, right, Abby?
Yeah, it really is. It's just folks that we've known for years. So, and there's so much business out there. It's less of a competition and more how can we protect more property owners? Ultimately, that's the goal.
Mhm. So you guys, if you guys want to grow, you guys need to get more traditional agency under your belt. Is that the aim?
That's correct. Yeah, we did a pretty good job in growing last year with the distribution that we have. We have some great agency partners, but that's right. Getting into more offices, and having training with those officers. If some offices don't write much flood and are interested in learning more, well, we put on a training. We do a one-on-one training with the said agency. We go through a quote. Not all definitions of flood are the same with carriers. So we talk about the definition of flood. We talk about how flood isn't always a peril where property owners insure to value. You know, with the NFIP, a lot of banks also require only up to 250,000. Well, on the private side, we could all go to replacement costs now. So there are some different factors to be had, but these are all good talking points for agents to have with their insureds. And that's really our goal, is to give you information as an agent to go back and discuss it with your insureds, find out what their needs are, what their requirements are, and then give them some options.
What's your fastest growing state?
Oh, it's the traditionals: Florida, Texas, Jersey, California. That's just where the risk is to insure. Obviously, the Carolinas, but luckily we're growing all over the country. You know, it's still a relatively new MGA. We've got a lot of capacity and a lot of room for growth, and a ever-growing agency base. So, you know, we'll have pockets here and there. It's like, oh wow, we're writing a lot in this city in Colorado, or, you know, we're writing some big policies up here in Rhode Island, you know. So definitely the traditional flood states, but yeah, we're growing all over the country, luckily.
I saw a random news 2024, the most net move-in state in the US was South Carolina. You know, the amount of people moved out versus moved in, pure net. And Florida came in number 2, and Texas came in number 3, and North Carolina came in number 5. I can't remember who 4 was, but yeah, South Carolina was number 1. So that being a state that, you know, a lot of coastal area below sea level, I was like, hey, that's interesting.
Yeah, I mean, you know, if you want a interesting exercise, just go look at the west coast of Florida and look at the number of homes for sale there right now. I think we're starting to see the early days of folks throwing their hands up and saying, I can't sit through any more of these storms. Like, you know, I can't do it. We're gonna see shifts. I hope it's not dramatic shifts, but we're gonna see shifts in how real estate is built, how it's sold. And I hope it's not drastic, but you know, we're kind of in the middle of that right now. So yeah.
Yeah, especially the Gulf, right? The Gulf of Florida.
Yeah.
It went from no major events in 100+ years to 4 of the last 5.
Yeah, I mean, look, there's always been hurricane activity there. There's always been that risk. It's just intensifying both in magnitude and frequency. That's what we pay attention to.
Guys, I think this has been a fun podcast, and you know, trying to understand your business, trying to understand your growth, your stories. And I'm looking forward to have you guys back maybe 6 to 9 months from now when you are ready to release your big news update, and catch up with you guys and just see all the growth that you guys had.
Appreciate the opportunity, Jeff. It was great being on here with you. Really enjoyed our conversation.
Yeah, and you know, if anybody want to reach out to them, please make sure you guys follow them on LinkedIn. Michael, I send you a LinkedIn request as well. So if you can, you know,
Of course.
make sure you follow these guys. And thank you for coming on our podcast.
Thanks, Jeff, and nice to meet you as well.